In November 2011, the Malaysian Accounting Standard Board (MASB) issued MFRS 10, Consolidated Financial Statements. The standard is applicable for annual periods beginning on or after 1st January 2013. MFRS 10 is equivalent to IFRS 10, International Financial Reporting Standard Number 10, Consolidated Financial Statements as issued and amended by the International Accounting Standard Board, IASB. Objective of the standard MFRS 10 based on paragraph 1 is to establish principles for the presentation and preparation of consolidated financial statements when an entity controls one or more entities. To meet the objective in paragraph 1, this MFRS A requires an entity, the parent, that controls one or more other entity or subsidiaries to present consolidated financial statements. B defines the principles of control and establishes control as the basis for consolidation. C sets out how to apply the principle of control to identify whether an investor controls an investee and therefore must consolidate the investee. D sets out the accounting requirements for the preparation of consolidated financial statements, and finally defines an investment entity and sets out an exception to consolidating particular subsidiaries of an investment entity. Paragraph 5, 6 and 7 explain about control in MFRS 10. An investor, regardless of the nature of its involvement with an entity or the investee, shall determine whether it is a parent by assessing whether it controls the entity. An investor controls an investee when it is exposed or has rights to variable returns from its involvement with the investee and has the ability to affect those returns through its power over the investee. Thus, an investor controls an investee if and only if the investor has all the following. A. Power over the investee, as mentioned in paragraph 10 to 14. Second, exposure or rights to variable returns from its involvement with the investee. And finally, the third one, the ability to use its power over the investee to affect the amount of the investor's return. Okay, let's continue to discuss MFRS 1 to 8. In November 2011, the MASB issued MFRS 1 to 8. The standard is applicable for annual periods beginning on or after 1st January 2012. In November 2011, the MASB also issued a revised MFRS 1 to 8 with a new title, Investments in Associates and Joint Venture, effective for annual periods beginning on or after 1st January 2013. They are respectively equivalent to IAS 28, Investments in Associate, and the revised IAS 28, Investments in Associate and Joint Ventures, issued by the IASB, International Accounting Standard Board. Okay, let's discuss MFRS 1 to 8. This is paragraph 3, which provide definition of the terms. Okay, let's start with consolidated financial statements. Are the financial statements of a group in which assets, liabilities, equity, income, expenses, and cash flows of the parent and its subsidiaries are presented as those of a single economic entity. An associate is an entity over which the investor has significant influence. Okay, the equity method is a method of accounting whereby the investment is initially recognized at cost and adjusted thereafter for the post-acquisition change in the investor's share of the investee's net assets. The net The investor's profit or loss includes its share of the investee's profit or loss, and the investor's other comprehensive income includes its share of the investee's other comprehensive income. A joint arrangement is an arrangement of which two or more parties have joint control. Joint control is the contractually agreed sharing of control of an arrangement, which exists only when decisions about the relevant activities require the unanimous consent of the parties sharing control. Joint control can be divided into two: joint operation and joint venture. Okay, one of the definition available here, definition for joint venture. Joint venture is a joint arrangement whereby the parties that have joint control of the arrangement have rights to the net asset of the arrangement.